Hello, folks. It's Tuesday, May 6, 2014. It's 8:11 a.m. Chicago time. Trading futures options on futures and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. So, overnight, the key news is a whole bunch of mixed bag of PMI data from Europe. The Australian bank kept interest rates in line, and there's just a lot of little bits and pieces. BMW announced also a mixed bag, beat on some things, missed on some things. UK services PMI came in a lot stronger, 58.7 versus 57.8. So we see reactions in the European markets, and in the euro popped higher, really strong right at the European Open, from about 138.80 to about 139.40 or something like that, ballparkish. The week is setting up. It looks to me like there's some setting going on for the ECB announcement on Thursday, some jockeying of positions and so forth. So I don't see that being attributed to anything else. I don't see much news out of Ukraine. U.S. trade balance came in at 7:30 at negative 40.4 billion versus 40 billion, so basically in line. Looking ahead, the only thing we have left on the U.S. calendar is the 9 o'clock IBD tip economic optimism number. For May, there's no consensus estimate. The prior is 48. As far as speakers, not seeing anything at all. I see Disney aftermarket announcing, and then I see a 25-year 4-week bill auction at 10:30 Central, and a 29 billion 3-year note auction at noon. So pretty light day in terms of fundamental geopolitical type stuff. So let's look at where the charts are leading us. So yesterday, the expectation in yesterday's Trader Bite, as always, you can see these Trader Bites whenever you feel like it. You can always go back and look at what I said versus what the market did, or what I said I expect versus what the market did. Yesterday, the expectation was for it to open, test lower in the 64.50 area, probably close 63.50, and push through the overnight low, and then find responsive buyers back towards 68.25 and 72, the 72 area. That was the expectation. What we got was an open that looked like an open drive down, and I discussed the possibility, the higher possibility of an open drive down, because we were opening out of the prior day's range and value. There's an opportunity for someone to push or to react by selling in an initiative way right at the open. And it looked that way. It looked like the market did not have much of a buy push on the open, as you can see here, before it dropped, and the drop was very deliberate. And then it pushed down to 60.75, where I put the opening swing low. 60.75 is the first place we saw a reaction by buyers. Pushed to 63 and went down, took that out by a tick, a one-tick test. One-tick tests are normally a pretty good setup. One tick of anything really gives you an idea of who's in control. So we have a one-tick test of the OS low, and then very strong buying back up to and through that 68.25 that I expected to 69.75, pulls back to 66.50, almost a tick before the opening swing high, and then continues higher while it spent the rest of the afternoon balancing. So my target for the upside, once it got into the prior day's range, into Friday's range, was 79.75. And it got to 18.80 so through by a tick. The 79.75 is the most prominent low volume node from Friday right here, 79.75. Pushed through to 80, and then it bounced for the rest of the afternoon. The expectation into the afternoon was chop. The setup here is fairly bullish from a profiling perspective. The high was okay. It was fairly decent, but the market kept going back up to 79.25 and putting in a fair amount of volume, so the expectation overnight was for it to continue higher. What it did is it pushed through the 81.50, which is the next big target up. You can see it marked here. It's been marked on here for a couple weeks, several weeks, 81.50. Tagged 81.50 and then rolled over and started to pull back to 225. So the overnight action looks like this. So believe it or not, we're trading the February unemployment range, which was released on March 7th. We're just stuck in here. On Friday, we went and pushed into March's non-farm payroll number, which was released April 4th, and fell right off. And we're just stuck in this March range right now. There's nothing surprising here. Overall, the market remains in balance as it has been for a while, since mid-February. You have those who are forecasting a correction, stepping in and getting squeezed, and you have those who are, waiting for the market to drop so they can buy it. The buying dries up very, very quickly above the upper HVN here at 72, 75, 73. It kind of dries up and is not able to maintain those prices. However, the market has also repaired a lot of the profile up top. This was the way this profile looked way back. If you look back here, you could see that it's treated a lot more volume below the point of control than above, and essentially it kind of needed to repair a little bit on the upside to test these prices a little bit more, and it's done so very, very well. See how smooth it is now. This profile is forecasting that a decent move is going to happen out of this range. I have to guess that it's on the upside. The monthly trend is unbroken. The weekly trend is mixed, but mostly up. The daily trend is sideways right now. So to me, this market's consolidating for the next move up. My targets upwards are 1915 and 1937, as you see here. These are measured move targets. In fact, I have a smaller measured move target now based on the most recent action, 1902. So it's hurry up and wait kind of a market. The overnight profile is showing that the low is weak. So the expectation here is for the market to open, test higher, try for the 1876 area or so towards the point of control, and it's likely to explore some of this thin profile beneath the area we went through yesterday. My primary expectation for today, since we did finish on the upside, we still have a decent high. We did take out the upside and test 81.50 overnight, not the day session. But in general, what this is doing is it's continuing this movement where we're putting in lower highs, lower lows. The expectation is that the way this looks is that sellers are stepping in at these prices, and in order to maintain control, the market's likely to push higher, flush out whoever is going to buy early, the market on open orders, and then rotate over and then start to move back towards 68.25 and 64.50, our wonderful, wonderful 64.50. That's my primary hypothesis. I got asked a question yesterday. I was told, well, gee, your primary hypothesis was for it to sell off early and then rally back, responsive buying, rally back towards Friday's range. But the way it sold off, it just looked like it was a trend day down at first. Do you only have one hypothesis, the one that you cover in Trader Bite? And I want to make sure you all are clear that I'm covering the primary hypothesis. There are always a minimum of 3 plans for any given day, a minimum of 3 plans, right? Market opens, goes higher, so now I have to identify what areas it might test before it goes higher. Market opens and goes lower. What areas can it test to go before it goes lower, and what targets? And then the market opens, goes up and down, and then goes sideways. So at a minimum, I have 3 plans. What I'm sharing with you, though, is the most probable outcome. Okay, sorry, it's a risk system. What I'm sharing with you is the most probable outcome, and so that's what I'm covering, because I don't want these videos to go on for a half hour. But that's my expectation. My expectation today is for a responsive to go higher early on, but I expect it to roll over and push the overnight low out, completing your profile that we just saw. Completing this, push toward 70, 68 quarter, and then see what the next leg does. Overall, I don't expect much of an active market today. I expect it to chop around a fair amount, and we're all anticipating the ECB announcement on Thursday. So we'll see how that goes. I want to leave you with thought. I mean, I could go through a lot of these other charts. You could see here we're forming somewhat of a head and shoulder, kind of an ugly-looking head and shoulder formation on the ES. It's got a fair amount of work to do yet. There's nothing here that tells me the market's ripe for a sell-off or anything, but it looks like it's consolidating, it's collecting energy before the next break. So overall, you know, the delta's been more active on the sell side than the buy side as it's been for months. There's nothing new there. As far as value, the market continues to just trade as if in balance. We have an outside day with higher point of control, higher point of control, higher point of control, higher point of control, and then yesterday is in line with the prior day with a lower high, lower low. So this is the key reason I'm expecting chop in here today. I'm expecting it to just trade yesterday's range. I don't expect it to drive in any direction. So my idea today is not to try to catch big runners or anything like that. I'm again going for the short game. Just like, you know, in the movie Moneyball, it's all about getting to the next base. Who's going to get you get to the next base? Who's going to get you one base at a time, rather than let's go out and swing for the fences and hit a home run every time, for those who understand baseball. But I want to leave you with one thought. Everything I'm talking about here and everything that you do as far as homework and everything else is theory. That's all it is. It's theory. Until you execute it, it is just theory. So you can study this market. You can study as many plans as you want. You can follow as many people as you want. You can read as much as you want. But in the end, it's all about execution. And as you're executing today, I advise you to pay particular attention to the conversation you're having in your mind, and what is the sensation you get when you're executing your plan. Because if you don't execute your plan according to what you said you will do, if you create the plan and wait for the market to show you its hand that it's complying with one or more of your plans, and you get a setup that you would normally take and you don't take it, it's all theory. And all you're doing is spending time just doing homework but never really seeing the true outcome of your effort or your edge. So all of this is theory until you execute. And execution is all about being aware of and being disciplined enough and controlling your actions as a result of how you feel. You cannot control how you feel, but the actions you take based on how you feel are what make the difference in trading, in my opinion. As always, as long as you know that there's a safety net in the form of a risk plan in place, it is much easier to walk a tightrope. You know, as long as you know that there's a safety net underneath you, you don't have to worry as much about going out there and walking across a tightrope or doing anything that's as risky as trading. As always, this is not suitable for all investors, and just watch your risk first. Good luck.